All right, let's dive right in. Today, we're looking at Warpaint London, a cosmetics company that is posting some seriously impressive numbers. You know, in a market where a lot of consumer brands are feeling the pinch, these guys are not just getting by, they are absolutely thriving. So let's get into the nitty-gritty of how they're pulling it off.
And look, this quote from their own chairman, Clive Garston, really sets the stage perfectly. He's saying it right up front. Hey, we know the economic environment is challenging. People are being careful with their money, competition is through the roof. That's the headwind they're facing.
But, and this is a big but, despite all that, look at this number. They didn't just grow, they smashed through the 100 million pound barrier for the first time ever. A 13% jump in sales in this kind of economy, that's remarkable. So the big question is, how on earth are they doing it? To answer that, we're going to have to pop the hood and really dissect their performance. Let's break down exactly where all this growth is coming from. Okay, so this is where it gets really interesting. Yeah, the 13% sales growth is great. That's your headline. But look down the table. Adjusted profit is up a massive 33%. Earnings per share jumped 29%. This tells a really important story. They're not just selling more stuff. They are becoming way more profitable on every single thing they sell.
And this chart just illustrates that point beautifully. Their gross profit margin, which is basically the profit they make before any overheads, has climbed up for 4 years in a row. We're talking about a more than 10 percentage point increase. That is a huge sign of a fundamentally healthy business that has its costs and its pricing totally dialed in.
And what's another key part of this growth engine? Well, they are absolutely crushing it online. A 35% jump in their direct-to-consumer sales shows they are building a real connection with their shoppers. People are going straight to their websites to buy, and that channel is becoming a really meaningful slice of the pie. So we know how they're making money, but the next question is where? Let's take a look at the map and see where these sales are actually happening. Well, this chart makes it pretty darn clear. Europe is the powerhouse, accounting for over half of their sales. Their home turf in the UK is providing a super solid foundation. That's another third. And then you see the US over there. It's a smaller piece for now, but it's a significant foothold with a ton of room to run. And when you dig in, the growth across these key regions is just fantastic. Europe's up 22%, thanks to big moves with retailers in Italy and the Netherlands. The UK is seeing solid 8% growth, and get this, they quadrupled their space in boots. And in the US, sales popped 19%, with a huge rollout plan for hundreds more CVS stores. These are major wins.
Now, success like this doesn't just happen by accident. It's all part of a very clear, very deliberate plan. So let's look at the 6 pillars that make up their blueprint for growth. Okay, this right here is the absolute core of their entire business model. It's a simple but incredibly powerful idea. They offer on-trend, high-quality alternatives to those super expensive prestige brands, but for just a fraction of the price. I mean, look at that. An eye palette for a tenner versus one that's over 60 quid? When money is tight, that value proposition is a knockout punch.
And their strategy just builds right on top of that foundation. It's a really comprehensive plan. Keep building the brands people love, be really focused with their sales, and just systematically take more market share, first in the UK, then targeting the huge markets in the US and China, all while continuing to pour gas on their e-commerce engine and keeping an eye out for smart acquisitions. It's a plan with a lot of moving parts, all pulling in the same direction.
But, of course, it's not all sunshine and roses. To get the complete picture, we have to look at the challenges, the potential bumps in the road that Warpaint is facing.
And the main headwind, which they're very open about, is the issue of increased US tariffs. See, a lot of their products are made in China, so when these new tariffs get slapped on, it makes it more expensive to bring their goods into the US market. And that puts a squeeze on their profit margins over there.
But they're not just sitting back and taking it. They're actively tackling this. They're looking for new manufacturing partners in other countries. They're also adjusting prices on their US website, where they have a bit more wiggle room. And, you know, it's important to keep this in perspective. Right now, the US accounts for less than 3% of their total profit. So while it's definitely a headache for their US growth plans, the board is confident it won't derail the group's overall performance this year.
And really, that brings us to the final, fascinating question here. Warpaint has a formula that has absolutely proven itself in Europe and the UK. Their value proposition is a winner. The US is this enormous, tempting prize, but it comes with this tricky tariff problem. So can that winning formula be powerful enough to overcome the pressure and unlock that massive American market? Well, that is the big question they're working to answer right now.